Hello, Tim Knight here. Well, we've got a deliciously red day on our hands. Yeah, really good day. Lots of red, lots of breakage going on. Let's jump right in. We're going to get right to it. And we're starting with what I've described as sort of my North Star in this entire endeavor, which is the Semiconductor Index, SMH. As we all know, semiconductors have been absolutely insane this year, especially since the, not Liberation Day, that was last year, the end of March Iran capitulation bottom, whatever we might characterize it as. And semiconductors have been thriving based on the AI trade, the AI premise. And that trend line that you see there has been doing a yeoman's job of offering support and resistance levels for it. And yesterday was just a fantastic setup because it was at a lifetime high and it was mashed right up against that trend line. And little did we know that the floor would drop out under South Korea. Although, as I said yesterday, my shoe shine boy moment was the article I read about young traders who, I was trading for years and these people didn't even exist yet. But these young traders come along, gobbling up South Korean stocks based on the idea that, well, they just go up every day, which worked for a while. So today's a nice break. One break does not a trend make. I mean, we had this before. I mean, look at this big red bar right here. I'm sure I was delighted that day too. And that entire move was undone within days and the uptrend resumed. The important thing about that break, though, was that the nature of the line changed its role from support to resistance. But yeah, I've been doing this a while. I've been doing this since 1987, and I'm not going to take one day's drop as you're like, well, that's it. The bear market begins now. It will one day. Today might be the day, who knows? You can only see in retrospect that, okay, 2 years ago, such and such started. But you're never going to hear me declare that, this is officially it. Because as I pointed out, you could have said the same thing here and it wasn't it at all. Lifetime highs were coming. Much higher prices were coming because people are insane and they'll just keep bidding this stuff up until the sheer force of the sellers overwhelms the buyers. And there's no real telling when that happens. And as I pointed out from time to time in the past, don't let the numbers fool you. Equities have been in a bear market since the year 2000. Sounds crazy. You can point to the chart and laugh. It is the God's honest truth. In normal, real money terms, equities peaked in early 2000, and they have not even approached that level since then. So we have had a 26-year bear market. Doesn't feel like one, but I would also point out that the dollar in your pocket's worth a whole lot less than it was in the year 2000. So what I'm looking for, of course, is a bear market in nominal terms, not just normalized terms. And today's been a good taste of that kind of thing. So that's SMH. An exaggerated version of this, of course, took place by way of South Korea. I mentioned yesterday, I'm pretty sure that for the first time I shorted EWI in size. It wasn't as clean a setup as SMH, and it was at a lifetime high itself, but it got whacked today. It's down 11.3% right now. So that worked out nicely. I covered that one. Maybe it's too soon. Maybe I'll never get such a good price, but I did cover that one, though I'm still pretty exposed. I have 34 different short positions going and an exposure of about 170% or so. So it's pretty aggressive. As far as SpaceX goes, it is getting a much needed relief. We're actually up on this one a little bit, and I've got a funny feeling that the bankers out there know what happens if this thing closed below 150. The headlines would be really bad for it. And so those with the vested interest have gotten in there, started propping it up. That's fine. It won't last. We actually did trade below 150 between yesterday and today. But yeah, they're just like trying to push this thing higher. But it did lose about $1 trillion of value since it peaked just a few days ago. And I asked ChatGPT, hey, what would SpaceX stock need to go to for Elon to no longer be a trillionaire? And I think the figure was like 134. So, you know, I often talk on this segment about big round numbers. And big round numbers have a special relationship to human thought, human nature, human cycles. And you just kind of knew that it was like, world's first trillionaire, world's first trillionaire. Here's how many miles a stack of $100 bills would go. All this useless information. There's these tiresome metrics. It's like, well, Elon, you know, congrats, but look out, because this stuff does not just mean that the trend continues. Big round numbers, big round events. You know, another example, when Bill Clinton and Al Gore, I think it was late 99 or early 2000, stood in front of a giant poster board and wrote, you know, the projection for the debt of the United States in a few years, 0. He had a big old Sharpie, 0. Didn't work out that way. $40 trillion later. Now, at the time, briefly, the U.S. in this, I know it sounds like science fiction, the United States government ran a surplus. For a little while, they actually ran a surplus. And so, you know, people tend to extrapolate naturally, AKA the aforementioned South Korean young traders. And so they figured, well, this debt problem is going to be cured lickety-split. So, yeah, nope, not, will never be. Anyway, SpaceX is kind of trying to prop itself up a little bit, and it's working so far. But I tweeted out last night kind of something that I've never heard, that I haven't heard anybody else mention, which is if SpaceX continues to suck and, you know, just kind of clumsily move lower, that's not going to do any good for Anthropic or OpenAI IPOs. I mean, let's just pretend that 2 months from now, SpaceX is trading at, I'll make up a number, 120. You know, it's not a disaster, but, you know, it was at 228 and goes to 120 and everyone's in the losing position and people are feeling pretty grim about it. And it's not a good foundation for like, well, now let's do another one, you know, because the market needs to be really enthusiastic about these multi-trillion-dollar IPOs coming out. So just saying. And so VCX here is predicated on the idea of like, get it while it's hot. These are pre-IPO companies. And as you can see, it sort of sniffed out that, maybe not, because it's lost a huge amount of its value already, the vast majority. So it's down today. So I do think it is sort of like realizing that maybe there's not going to be this, you know, every week a new $1 trillion company coming out. The diamonds were green until recently. Actually took advantage of their strength earlier by shorting, of course, diamonds. And my stop is set just above yesterday's high, but this is below its own broken trend line as well. And this is one of my bigger positions. Actually, it's my biggest position right now. It's a pretty conservative position, but yeah, it's a big one. EFA, I came into the day short this. I am maintaining this one. It was a little tempting to cover it, but I'm just letting it ride. It's down 2%. We've got gaps all over the place. Obviously, you know, just about everything with respect to yesterday's low versus today's high has this chasm between it. And within that, China, that is to say FXI, continues to slink lower. As I pointed out ad nauseum, the tippity top of this, which is this green bar here, was the exultation and the excitement over the Trump-Xi summit, which meant diddly in the end. It hasn't changed a thing, and it's been just grinding lower ever since. So yeah, yep, there's your Chinese market. Down, down, down she goes. As far as gold goes, I also came into the day short XME, short GDX, short EQX, all kinds of precious metal stuff. We're continuing to slip on this. And I've said all along, I think 4,000 is a pretty reasonable target for gold. Maybe that's too high. Maybe 3,500. We'll see. But yeah, it's a pretty. It's not super clean. You can see the piercing of this line here, but it's not a pretty pattern, and we haven't any kind of washout in it here. So it could be lower than 4,000. As with EWY, I did cover my GDX short, but I'm hanging on to EQX, and also I'm also hanging on to another item I entered into today with XME. This is, from a trading perspective, it's kind of an interesting setup. XME is the metals and mining ETF. And this is an example of a failed bullish breakout. And we had here this nice little pattern, and uppity, uppity, up, and it cracked above it here, and whee, up it goes. And so it looked really good to the upside there. And then the next day, bloop, it undid most of that. And at the moment, that would have been okay. But then the next day, it slipped even further. And it's like, I guess not. And then after that, it was just like plunged. And so this has been just slunking below that failed bullish breakout. And so you may remember in the past, those who've been watching me for a while, I've shown the XME GDX ratio chart. XME is going to greatly underperform GDX if history is any guide. So I would rather be short XME than GDX because it'll do even worse. I'm not talking much about Iran or the Strait of Hormuz and such because it's just, why bother? And it gets dangerously close to political talk, which I try to avoid for various and sundry reasons. But the chart on crude oil continues to slip lower little by little, which is as predicted. The right triangle setup here, and we're just easing beneath. So put it this way, the chart is more reliable and truthful than all the politicians talking about this, that, and the other. So just keep an eye on the markets. The markets will tell you what's going on. And what the markets seem to be saying is that it's probably going to be okay. So down it goes. XOP is basically unchanged. And as I indicated, I have no position in this or any energy at this point, although if it did clamber its way back to this line, it'd be a very interesting setup. But as it is now, nothing. XLE, which is the other energy one, this is actually up today, about 2/3%. And here too, it's getting kind of in the vicinity of a pretty interesting little head and shoulders pattern right there. So might be good shorts in the very near future. As I said, I've got a lot of positions right now. Just these aren't grouped by sector or anything. These are just kind of some I plucked out to share. AMD is one. This is down almost 6%, and I would love to hang on to this until it covers this, seals up this price gap, which is several miles away. AXT Inc. Is down very nicely, about 17%. And there's no real pattern on this one that I've drawn, but I'll just sort of bang that out roughly. So that's moving in the right direction. As I said, EQX is an item I'm hanging on to, which is precious metals related. Very pretty chart. It is approaching not just a low for the year, but for many months. We'll see if we can breach that or not. Nokia, which I don't even know what they make anymore. Years ago, they made those little flip phones, but God knows. This has been a very hot stock until recently. And this one's down a little over 5%. Here too, I'll just kind of rough out a little bit of a topping pattern there. So that's looking close to the precipice. Be nice to complete that. 5, this was a real favorite. This is not kind of thinly traded. It's 5 below, it's called. And I made mention that I've been watching this for a while. And on this day, I was thinking, maybe I'll take the plunge. And the next day I saw it collapse. Like, well, too late. But it fell, it retraced, and I got into it here. I didn't wait for it to close the gap because I didn't think it would, and it didn't. But I got in on this day, and it's doing pretty good. And if we back away from that, you can see, you can see there's I think more potential to come, especially if you look at a long-term chart. There's plenty of prospective downside to that. A couple more, 3 more of these just individual items. There's SERV Serve Robotics, down over 5%. And I've shared this one kind of daily in recent days. So this one's slipping below. And a good example of how you can have good shorts without it being super high. It can already have most of its value gone and plenty more left. VSH, Vishay Interactive. This one's down over 8%, around 8%. Nice little gap on that one. And of course, WDC, little storage company here, down 8.25%. Western Digital, and gonna hang on to that one. I've tightened up stops across the board, usually to the price gaps, but I hope this isn't the only day we get with some selling. As far as Bitcoin goes, I re-entered that earlier today. I was a little frustrated with myself for getting out of my short position on that because obviously it's doing fine. We'll see if we can get some downside momentum on this. Clearly, the big event would be if we can break 60,000 on Bitcoin. That's a big psychological barrier. In turn, MSTR is down again, which seems to be his business model, losing value. So this is down 4.14%. New low for the year, down about 80% from its peak, on and on and on. So that's kind of amazing. Michael Saylor's magic at work. So in sum, looking at the NQ, we're down almost 1,000 points on this, which is nice. We have, we had this huge pop here, which I guess was the 27th victory declaration for Iran or something. It was a big day. That's gone now. We were intraday, I think, at or near a lifetime high just yesterday. But we've undone about a week's worth of gains, and we'll see if there's more to come. But it's drink cool water in the desert. It's nice to see such a drop, and would love to see a lot more like it. So anyway, so far so good. Tightening up the stops, tidying up the positions, just kind of ironing the shirts, as it were. It's important to maintain risk properly, and just keep an eye on the fresh charts to make a rational decision about where those stops should be. So I will leave you with that and see you tomorrow, and hope you're doing all right. Good night.